have an opportunity to see it. So, all right, just want to make sure we got 5 people here. We got Andy, Justin, Gabriel, Pat, myself. Andy, Gabriel, Pat, can you guys hear me?
Yeah, I can hear you.
Perfect, perfect, perfect. Nice, nice. All right, guys. So, what we're going to talk about, we're going to talk about real quick. Don't get trapped by the market. Right? We're going to trap that bitch like a bear. All right, like a bear trap. All right. All right. So, how are we going to do that? First, let's figure out what's a trap, whether it's a bullish trap or a bearish trap. So you ever notice when the market throws a big bullish move like this, and then the next candle that follows, I'm just going to go ahead and draw it like this. It draws a nice big bullish move like this. And then what they do is they throw a nice, it's a nice full-blooded candle shooting all the way up. But then the market throws out a wick like this. Okay, it throws out a wick like this, and we have a little small wick at the bottom like this. Okay, nothing major. And you're saying to yourself, okay, this is going to keep going up. This is going to keep going up. So at first, the market is making this big, strong move like this. And then it starts to pull back like this. Okay, it starts to pull back. Now, you see this move, you get into the trade, so you know what, this is going for a buy. But then the next candle, okay, the next candle opens up right at this candle close, right? Next candle go up like this, you're like, oh shit, that's a buy. That's a buy. You get into the trade, and look what happens. The candle come all the way back down, leaving you with a wick all the way up here. Okay, leaving you with a wick all the way up here, and leaving you with a wick right here. Okay, let's just bring this one down just a little bit. Okay, perfect. So it looks like this. So now this is the first setup. You're like, oh shit. So all the buyers, okay, all the buyers that was in the zone are trapped. Okay, the buyers are in the zone are trapped. So now you know when these wicks started coming up like this, the sellers started saying, yo, this market is dropping. This market is dropping. Guess what happened? The market starts to pull back just like this. You're like, I knew this market was dropping. And then it pulls right back up to the zone here. Now, guess what? They got everybody. They got the buyers and the sellers. This market came all the way down. They got the buyers and the sellers trapped. Now, what's going to happen? You see this line right here? This fine line that's right in the middle. Okay, that fine line that's right in the middle. Well, they got $1 million trapped in this zone. Right in this zone. So what the market is going to do now? The market is going to trade right in this line. It's going to go like this. Let's move this one down. It's going to go right to the edge of this one here, but not break it. Okay, it's going to go down to the edge like this. Then the next one is going to go up to the top like this. This candle right here created a channel. It's going to keep doing this over and over and over until eventually it breaks out. This is called a trapping candle, also known as an inside bar candle. Okay, this is an inside bar. If it's a daily chart, it's called an inside day candle. Now, what that means is this is the previous day candle. This is the current day candle. Well, this current day candle is trapped inside of the previous day candle. You're trapped. You're not going anywhere. It's almost like trading consolidation. You're not going anywhere. What is the real meaning behind consolidation? It's accumulation. They're accumulating so many buyers and sellers. They're trapping it. So when that market explodes, it really explodes. So that's all this is with the trap. All they're doing is preparing you for a huge burst into either direction, whether it's a buying direction or a selling direction. Now, how can you tell if this is a bearish trap or a bullish trap? And how do you set your target, your take profit on it? Well, this is how you set your target. You measure the entire trap, okay? And then if it breaks out from the top, from the bottom, well, it's a measure move. This entire move, whether it's 100 pips, whatever this candle is, it's 100 pips, well, your target is 100 pips. Okay, now let's go over to the chart so you can see what it looks like on a live chart. Are you guys following me so far?
Yep.
Yeah.
Perfect, perfect. Now you've seen this happen many times, right? You know, you see this happen every single day. And there we go. So looking at my chart right now, you probably see a trapping candle right in front of you. All right,
On Thursday, right there in the middle.
there you go. On Thursday, you see a trapping candle right in front of you. Let me just backspace and delete all this stuff off my chart. Let me just go ahead and get a clean chart real quick. All right, perfect. There we go. So right here on Thursday, let's make that 14. Perfect. So you guys can clearly see right here on Thursday, look how this market shot a wick up to the top. All the buyers was like, yo, this is buying, this is buying. Because at one point, this was a full buying candle. And then it pulled back right in the middle. So right here, they got everybody trapped right in the zone. Everybody's trapped right in the zone. All the buyers, they got all the sellers trapped in this zone. Okay, all the sellers trapped in this zone. You're not going anywhere. Look at this person right here. Say, oh my goodness, this market is going up. You see this buy, this big bullish move that happened? The buyers was like, yo, we out of here, we out of here, we out of here. And what happened? The market pulled right back down. And the reason why I'm telling you guys, do not trade this on a smaller time frame. You should only be looking at this on a daily and the 4-hour time frame, even a weekly, because look what happens on the 1-hour time frame. You get this false breakout. If I was to pull this up on a and we also going to be talking about on our market recap, we're going to be talking about time frames, because time frames are more than what you guys think. It's more than just a daily time frame. It's more than just an hour time frame. You see this move right here? This false breakout. This move right here. I guarantee you, on a weekly chart, this move was this huge candle. All right, on a weekly chart, you had this huge candle. But what you're going to see is, on a weekly, you're going to see the candle close right here, and then a wick sticking out all the way up here. That's a trap. All right, that's a trap. What day is this? September 22nd. So let's take a look at it. September 22nd. I'm just going to put a nice big line here, so we know our place, and a line right here. All right, go over to the weekly. It's actually this week. Okay, what'd I tell you? You see that? There we go. I just explained it to you what we have going on right now. Exactly what's going on right now. So time frames are very important. It's more than just, I'm going to switch to the daily time frame and look at my chart. I'm going to switch to the hour time frame for my entry. Okay, we should be marking up our charts on the daily and using the 4-hour for our entry. It doesn't matter. It doesn't hurt to sit on your hands. Now, so again, I said we're going to just do this about trapping candles, so we can easily find a bunch of trapping candles. Look at this, the weekly time frame. Isn't this a trapping candle? Isn't this a trapping candle right here? Andy,
Yes, sir.
this is a trapping candle. It doesn't have to be a huge candle. Now watch what happens when I measure this trapping candle. Okay, my take profit, perfect take profit exit. Look at that. Perfect exit on the take profit. Look at the reaction from the market after my take profit hit. Guys, how easy was that?
Too easy. I don't know why I let that hit get me today, but I had me on my toes for a few hours today.
It's nothing worse than sitting in a losing trade. And then what happens? You end up stacking more orders on top of a losing trade. Okay, so let's move forward. Let's find some more trapping candles. 1, 2, 3, 4, 5, and stop. Let's see. You're gonna find trapping candles all over your chart. We're on a weekly time frame right now. Look at this. Okay, this is a trapping candle. Why is this considered a trapping candle? Matter of fact, I got to call on people now. Justin.
Yes, sir.
Why is this a trapping candle?
Because the wick at the bottom?
Okay. Well, not just the wick at the bottom.
With the full body?
It engulfs all of this.
Right.
So remember, this is the weekly time frame. So it had buyers and sellers trapped for 1, 2, 3, 4, 5, 6, 7, 8 weeks. Okay, it had buyers, and you're probably thinking, I'll just sell resistance and buy support. Sell resistance and buy support. Yeah, that's 248 pips either way. Okay, but there's something right here that made the market stop and stop what it was doing. Have you guys ever heard of key levels? Anyone ever heard of key levels?
I've heard of them. I'm not too familiar with them.
Okay, perfect. The key level, support and resistance, it's just one line. Now, many traders want to say, oh, this is a key level, this is a key level, this is a key level. Okay, but I'm going to show you something. Go to the monthly chart. Blow your screen all the way up. 1, 2, 3. All right. Now let's go ahead and move the period separators. Can you guys still see my screen clear?
Yes, sir.
Perfect. So what I'm looking for, okay, I'm looking for, you see how this market came down right here? It shot all the way down, but then bounced all the way back up. Boom. That's a key level. You see this right here? All this did was trapped everybody. All right. It shot the market down because this is a strong key level right here. A very strong key level. Okay. Watch this. So all I'm looking for is long wicks. You see this? See how this market dropped all the way down and came back up? Okay. This is different from finding support and resistance. And it's going to make sense in a minute. All of this right here, all of this. So I'm not looking for these yet. I'm looking for this one right here. You see how it has a long tail on the top, long tail on the bottom? Indecision. So I'm going to put one right there. Let me just go ahead and beef that up a little bit and watch as I go back over the years how the market respects this line. Watch this. See this line right here? And this on any chart, doesn't matter. Notice right here, this is a very important key level. We just reached it right now. A very important key level. Notice how the market broke out and came back to it. Broke out, came back to it. Broke out, came back to it. Broke out, came back to it. Broke above, boom. Went above, supply and demand, came up. Look where it came back to, right to the zone. We went from 2007 respecting this line all the way to 2003. It break out, come back. 1998, it's respecting it. Look what the market is doing. I can't go any further. Yes or no? Doesn't this line seem like it's very important?
Can you repeat how you identified that line?
Perfect. Hold backspace, clear your chart. Okay, so what I'm looking for on my chart, and I'm not just looking for a 50% move. I'm not even using Fibonacci right now. What I'm looking for is I'm dissecting my chart. I'm looking for candles that look like, let me just blow it up so you can see it. Okay, I'm looking for candles that look like, where we go, where are we? Like this one here, okay? Indecision, okay? Nobody, just indecision, okay? Here's another one way over here, okay? Here's one right here, okay? Something like this. This is what I'm looking for, okay? And and that's it. So what I did was I found it right here, right on this candle. So what I did was I put the line at the close of the candle, right on the body. And notice, when I put it on the close of the candle, right on the body, maybe I drew it down. Oh, I didn't even see that candle last time. I had it like down here because I had it on the wrong candle, but it's actually on this candle right here, this key level. And look what the current market just did. Yes or no, when the current market hit that key level, did it have a reaction? Yes, it had a reaction. It had a huge reaction, so bad that it hit it and pulled back. Look at this. When the market hit it, it pulled back and created what we know as a V bottom. So what do we want to see next? Switch over to the line chart. Now, another way you can find your key levels is, you switch over to the line chart, because the line chart shows you the exact close and open of your chart. Okay, shows you the exact close and open of your chart. You guys still here? I had one person jump off. Some powerful stuff he's about to miss. Oh, there you go. Oh man, Pat, I was getting worried, man. So where you go? All right, so you guys with me? Is that making sense? Did I lose you? Everybody with me?
Yeah, we here.
Perfect. All right. So as you can clearly see with this key level here, as the current market came and smacked it right there and had a reaction to it. So let's pull up another chart and find another key level. Okay, so we're gonna look at what we're gonna look. Somebody pick a chart, any chart.
UJ, please.
We just did that one.
Oh, my bad. I thought it was EJ. I'm tripping.
Yeah. Oh no. Maybe that was EJ. Yeah, that was EJ. So UJ. So we go to UJ. And all right, perfect. All right, so I always blow my chart all the way up and then go 1, 2, and 3. Let's go to the monthly chart. Let's get rid of these, get rid of everything that's on there. All right, perfect. So what am I looking for? I am looking for indecision candles on the monthly chart. Indecision candles. All right, I have one here. Okay. All right, so I see one there. You got a few here. How the market dropped down and then pulled back up. Ooh, okay. See how this one pushed up and came back down? There's one. All right, so this is UJ on the monthly chart. So now notice between, where is it at? Where's my first one? Okay, notice between this one here and this one on the bottom, how the market just goes and respects this zone.
Huh? Grab snacks.
Okay, notice how the market goes and respects this zone. So if I was to switch over to the weekly time frame, okay, look what it looks like on a weekly. These are your key levels, and look at this right here. Notice how the market dropped all the way down but came right back up to close to this zone. All right, this is a very important level, very important level. Okay, and you guys ever heard of the market sentiment or market something where the market reacts to the double zero? Well, look at this zone here. All right, this goes to 121.072. 0.72. This is a strong level. So if UJ was going to, let's just say if UJ was going to rise, the first place it would go and stop would be right here at this level, because this is a very important level. Let's go over to the daily chart and see what it looks like. Now, if it drops, we know that it's going to this level. Make sense?
Wow, so that's like a perfect opportunity to put some sell stops, buy stop, right?
That exactly. Look at this. If UJ drops, right? If UJ decides to drop right now, well, your take profit will be right at this level for 151 pips. Like, look at, oh, here's a beautiful one. Look at this. All right, see how the market dropped down? This was the election night. All right, how the market dropped down and then it closed all the way up here. Well, I would do something like this. Here's a trapping candle. Look at this trapping candle right here. This is a trap. You were trapped from 2016 June, Brexit, all the way over to October on a daily. And right around the zone, indecision. Now look how you could have traded this, and oh my goodness. Let me know if you guys can see this. Let me just clear everything off my chart. If you see what I'm about to show you, you see this right here, how the market dropped all the way down and pulled back up? I just want to make sure you guys see that. You see this? Right here.
Yes, sir.
Right here. This is about to blow your mind. Watch this. Imagine you're saying if the market breaks this line, I'm going to enter on a pullback. If the market breaks this line, I'm going to enter on a pullback. You could have caught this whole entire move. Wow. This is a very powerful level. You could have caught this whole entire move. Low side of the market goes down, goes up, respects the level, boom, breakout, retest, boom, breakout, retest, drop, breakout, retest, breakout, retest, breakout, retest, breakout. What do we have? Retest, rise. So whenever this market break out, we're looking to buy on a retest on this level. As we move the market forward, if the market ever decides to drop down, we know where it's going, to 102. That's when the market is going to crash. We go over to the 4-hour chart.
So
look how,
just to confirm,
mm-hmm.
we do the measured breakout movements only on the 4-hour chart, right? Not on the monthly or daily.
No. You could do it. You're talking about the measure for the trapping candle? The trapping candle?
Right.
Yeah. So with the trapping candle, you can use the daily or the 4-hour, but I wouldn't advise you to do it on anything lower than that, because let's say if you do it on a 15-minute time frame, you're going to see a whole bunch of trapping candles everywhere. So let's say you go to the 15-minute time frame and we find a trapping candle. Oh, we got a reversal signal right here. I guarantee you this reversal signal, we put a line here. Oof, look at this reversal. We put a line right here and look what happened. Boom, drop, boom, and market went to hell. All right, but let's get back into it real quick. So let's look for a trapping candle on a 15-minute time frame. All right, here's one right here. Okay, here's a trap. So this is a false move. You know why this is a false move?
because of the undecided candle up there?
Well, that's right. But if we was to switch to the 1 hour time frame, the market actually closed right here. Okay, we switched to the 1 hour time frame. The market shot all the way up and closed all the way down here. So you'll see this candle is not going to be the same on a 1 hour time frame. Okay, that candle is not going to be the same on the 1 hour. Let's see, where are you? Here we go. Boom. There we go. Now look what we got on the 1 hour. On the 1 hour, there we go. Perfect. This is what we have. The market goes up with a false breakout. Okay, this is a false breakout of the trapping candle. False breakout, and then the original move went straight down here. Now you see why you shouldn't use the breakouts on a lower time frame, because on a lower time frame you throw those huge wicks. Okay, this is your trapping candle. Throw those huge whips out there, and you get caught in that move. So if you decide, you know what, I want to take this as my measured move. Let me see, did you make it? Well, you actually did make it. You hit your target. How many pips? I mean, 11 pips. Is it worth it? 11 pips just to get caught into a downward spiral? But imagine doing that as a real trader, okay, on a higher time frame. Yes, it's going to take, it involves you sitting on your hands and not doing anything, but this is just one pair. While your trade is setting up, guess what you do? You move to another pair. Guys, look how AUDUSD played out very, very well. AUDUSD played out very well on a call that I set up the other day. Okay, let's take a look at AUDUSD. We're on a daily time frame. Now, we started on the weekly. And I told you guys, Aussie was making a nice move to the low. What do Aussie have right now? They have a lot of indecision going on. Okay, wicks upon wicks upon wicks. You see how this market dropped all the way down? This is the weekly time frame. This candle is still forming bearish because we're not at the end of the week. All right, we're not at the end of the week. But look at every other week. Notice how the market dropped down and closed here. Dropped down and closed here. The market pushed up. Now we got indecision. This week right here, this market is dropping down. Okay, but let's go over to the daily to see what it looks like right now. Okay, on the daily, it's pushing up. Go to the 4 hour. Okay, go to the 4 hour time frame. Look what we got. We'll move this over just a little bit. All right, now on the 4 hour time frame, we got more movement. Go to the 1 hour time frame. Look at this. It's the beginning stages of a reversal. Okay, go to the 30-minute time frame. Look at this move that happened. And when you go to the 15-minute time frame, you're going to see an even bigger move. And you're probably saying, damn, I missed out on an inverted head and shoulder. But you want to see something right here? You see this move right here? This move doesn't look like this on the daily. Okay, on the daily, this is what this move looked like. You see this long candle that came down and spiked all the way up? What if I put a line here? Now, see this line here? This is a false breakout. This right here is where the market is really at. So you see this false breakout that happened right here? Let the market come back up. Look to your left. Look to your left. See if you have indecision candles. Wait for that market to come back down, enter on a retest, and take the market to heaven. So watch what happens when we get on the daily chart. Watch this line. Perfect. Perfect. Okay, market broke out of demand. This is a demand zone. Came back down. Now, guys, do you remember the rules? How many times will a market retest the zone before breaking through?
3 to 4.
Three to four times. How many times did we touch this zone? We only touched the zone twice. So we had no other choice but to rise. Okay, so if you missed this move on Aussie, I mean, Aussie doesn't move that much, but damn, 60 pips just today alone? On the standard lot size, that's $600. Okay, so what are we looking for? Okay, we had on Aussie, we had a nice move go up to here. And you already know that 618 is a very powerful number. Okay, the market goes up, come down and hit that 618. Boom. After hitting that 618, it came back down to confirm a support level. Okay, it came down to confirm a support level right around the zone here. So that's your 618 confirmation that we have support. Boom. What does the market do next? The market goes up. It fell. Okay, it fell to create a higher high. The market came back down and did what? It hit that 618 again. Okay, after hitting that 618, remember, in order to create an Elliott's wave, this is wave number one. Okay, wave number one, two is the pullback. We haven't created number three yet. Okay, because we just broke this high right here. We just broke this high. So now this will be 1, 2, okay, 3. We will have to, break this high and keep going up. But I want to see this market come down. If this market comes down, this is support. This is where it currently is right now. And this was beautiful. This market, all it did was breakout, retest right around the zone. Breakout, retest. Look for your wicks. Look for your wicks. Right around the zone here. Okay, right around the zone. You see this? Look, I'm not focusing on this wick up here. I'm focusing on where the market closed at, because the market pushed all the way up, but came all the way back down. And look what the market did. Breakout, retest, retest. You guys following me? Okay, breakout, retest, retest. I want to see this market, jump around the zone for a minute, because we're going to take this thing all the way up. When it's ready to go, this is going to be our take profit. Okay, this is going to be our take profit right here, right around this zone. Okay, so if it comes down to the, even if it comes here and just start to push up, that's 1,000 pips. Okay, if it comes down to the 23, 1,100 pips. Comes down to the 50, 1,300 pips. And my favorite number, that's 618. If it comes back down to this zone, 1381. That's Aussie USD. Now that can take a few months. Okay, that could take a few months, but imagine entering the trade and just holding it, setting it and forgetting it, not doing anything else. All right, guys, I don't want to keep you too long tonight. This was just a recap on trapping candles, knowing how to trade it, and finding your key levels. Okay, notice how the market dropped all the way down right here. It dropped all the way down, but pushed all the way back up. Put your line right there. Put your line right there. Boom. Market broke that key level, pushed all the way down. Okay, so what I'm going to do is, I see this market is creating levels. Okay, notice how this one did a false breakout here and stopped here. If this market comes back to this zone, I'm buying. And that's what happens. 1, 2, 3, 4, breakout, retest, This market went straight to hell. You broke structure. When you break structure, wait for your retest. The market is dropping. All right, you guys have any questions real quick?
So that last part, real quick, Owen. Real quick. What was that last part you said about the breakout and retest?
Okay, so that's basically when you break structure.
Right.
Okay, whenever you break structure, all you're doing is waiting for your retest of that same structure that you broke and just ride the wave. Now, remind you, remember how the market moves in waves going up? Well, it does the same thing. Here's a measured move right here. All I'm going to do is take this from here to here. Wait for the pullback. I'm going to copy this line. Now I know exactly where my take profit is going to be at. Okay. So even if I took it from here, from here to here, from here to here, then took it from here to here. See, notice I'll pull back. Okay. And then took this one from here to here. These are nothing but measured moves. Pull back and notice something. Notice every time I move these lines, look what happens. This one, my take profit was here, but look what the market did. That's a new entry. That's a new entry. Let's see if this one measured out, if it played out right. Ooh, you just missed it. You would have gave all your money back, but you know, those are the waves. Okay, you got one. Well, this would be technically number 2, and then 3 here. Then the market starts to make its way back to the other side. Just put up your moving average, 50-period moving average, and see where you are in the market. Are we in an uptrend or a downtrend? We were in a downtrend because the market is below the moving average, but now the market is above the moving average. So now we're making a U-turn and taking this market up. So I want to see this come down and smack my moving average. And that's going to be around the 23.50 or 618. All right. But like I said, I want to thank you guys for jumping on.